Hello Sector Watchers, welcome to the show. This is the 54th episode of Sector Spotlight on Tuesday, the 3rd of November, and recorded on the 2nd. I am Julius de Kempenaer and it is my pleasure to host Sector Spotlight on Election Day 2020. I have no idea what the outcome will be and I'm recording a day prior and I don't have a crystal ball, but I'm 100% sure that it's going to be a wild day with a lot of events. And I can't wait to see how the day will evolve and how the markets will react. Later today, after the close, I will join Dave Keller in the final bar, where we will have the first opportunity to discuss the market's initial responses. If you'd like to get in touch, please go ahead. My mailbox is open, and also the comment section below articles and videos is a good place to share your thoughts with me and the rest of the world. Today is the first Tuesday of the new month, which means that we are going to have a look at the completed monthly charts for October. At the end of the show, I will also present one adjustment to the long-short basket. Before we start with our usual overview using RRGs, for this occasion I would like to start with the daily chart of the S&P 500. And the reason is that obviously we had a pretty weak week last week with a serious decline, but the good news, if you wish, is that the important support level around that 320 area once again held up, and we've seen that here in June. We had some working as resistance in July, it broke, it came down as support. Late July we rallied, we came back, and it was an important support level at the end of September. We rallied again to the previous peak that we saw in September. We tested that again in October, and now in the last week of October we once again came down to that 320 area. So no doubt that 320 is an important support level for the S&P 500, so just be aware of that. I'm definitely going to watch that level in the week to come, which undoubtedly is going to be a very interesting week with the elections going on. If we're going to look at what happened in the various rotations, we'll have the rotation of asset classes here on the left hand side, and we have sectors on the right hand side, and it's the week ending October 30. And the VBINX, the Vanguard Balanced Index Fund, went down 3.5%, which is a pretty large number. We haven't seen that in a while. The big loser this week, clearly the stock market, stocks, ITOT, down 5.6%. Usually that means that bonds did well, and they did well. They did a lot better than stocks, but in price terms they also went down. Government bonds only 10 bips, corporate bonds 70, and high yield 1.2% lower, versus again stocks down 5.6%. So the spread is 5.5%. Bonds outperformed stocks by 5.5% last week, and you can see the rotations here that are clearly in favor of all these fixed income related asset classes, and we have the stock market moving clearly lower. If we compare that with the rotation that we had a week prior, we can see that these rotations sort of continued on that path. Clearly the second half of that, those blue lines following the initial trajectory, and the similar for the yellow path on the stock market. We got an uptick in real estate. We got a continuation down in commodities, and we have DJP sort of disconnected on this shorter term time frame. Anyway, the rotations right now are clearly in favor of bonds, and the odds for ITOT to turn back up towards leading while inside weakening are getting definitely smaller now. So a little bit more caution, I guess, for stocks, which is not weird going into the election because nobody knows what's going to happen. If we see how that translates into sector rotation, then obviously we see a lot of red. As a matter of fact, everything is red. Utilities being the strongest sector, or the least bad, less bad sector, with a decline of 3.7%. And then we have real estate picking up in the improving quadrant. We have materials doing very nicely, crossing over into the leading quadrant, same as consumer communication services, moving further into leading, so that's good. We have staples. Given the weakness, at the end of the week, some disappointing rotation because of hook down, so we're inside improving and starting to point down towards lagging again. We have to see how that moves at the start of the new week. We have energy doing relatively well, but still far away to the left. And now we have healthcare starting to improve, almost crossing over into leading, so short-term improvement for healthcare there. Technology is now definitely into the lagging quadrant, so that weakness that was visible on the daily and the weekly rotations over the past few weeks is now materializing. It's now going further down into the lagging quadrant. Industrials is still on the right hand side, very close to the benchmark with a very short tail, so that's still a possibility to stay there and turn back up, especially given that really short tail that we see there. And the same goes for the consumer discretionary sector, which is inside weakening, and despite the fact that it was the weakest sector of all last week, the short tail still gives it the opportunity to turn back up without crossing into the lagging quadrant. I want to leave it at this for our overview of what happened last week, and start working on our usual segment where we do an overview of the developments on the monthly charts to get a feel for the big picture going into the new month. Well, the first monthly chart that I want to show is the S&P 500. Here you see that long-term trend channel, series of higher highs and higher lows, and some wild movements during 2020. By the way, I can't believe that we're already in November, heading towards the end of the year. I can vividly remember what happened at the start of the year, and then that big move down in March, and then the run up. So it's like this went super fast this year. Again, this year went faster than any other year prior. If we look at the chart, then mind you, the last little bar here is the price action of today, because I'm recording this on Monday, the 2nd of November. So this is 1 day's price action, and the big challenge with these monthly charts, especially in this time of the year and this being an election year, is to actually judge the chart on what you see instead of what you would like to see or what people want you to see or you think you should see. And I think that is the hardest thing, stepping back and looking at these long-term pictures here. If we look at the trend here, that is still going up. Last month was weak, but it didn't hurt this long-term picture. That higher high, higher lows movement is still there. If you look at a good exercise, I think, is always to swap the bars for a line chart. And if you do that here, then you can see that, if you would show this chart to someone without telling him that it is the S&P 500, I mean, it's very hard to get bearish on a chart like this. I mean, we're still above that previous high, and it's all looking good. So, for the S&P 500, so far, at the end of last month, things are still looking good. We saw the rotation in favor of bonds over stocks. I told you it's a short-term RRG, it's the daily, and we see a little bit of that on the weekly coming back. This monthly picture here is not too bad at all. If we move on to government bonds, then let me start with Govd. Then you can see that this chart seems to be running on its last legs, this trend. Last rally wasn't able to push above prior highs, and we're now coming down, and this could well turn into a double top formation, and it's a little bit better visible on the 7 to 10 year on IEF. And I've got this chart here, and I left my previous patterns on because I think this chart it's like a textbook chart actually. We got this super nice big wedge which executed and actually followed through almost perfectly. We reached the price target based on that wedge. We came into something that we had the discussion about whether you could call that a flag or not. I don't think it's a flag because it's way too long. It wasn't meant to be called a flag, but it certainly has this short counter trend reaction characteristics and then a powerful breakout. That powerful breakout led to a new high, and now just like in golf we see this potentially turning into a double top. So I'm gonna watch this 119.40 area as a very important support level. If that breaks, I think that is very bad news for the bond market, and how that translates into stocks we'll have to wait and see because there are various scenarios possible. But I do think that this potential double top is something that we need to keep an eye on. If we move to corporate bonds, we see a slightly more positive picture here. The breakout is still intact, and again, you know, look at this wide move in March. A good exercise again is to swap it for the line chart, and when you do that, then you see that it's actually a very nice breakout. Previous resistance tested as support, and we're still on our way higher there. So from that point of view, corporate bonds are still good. I think you can actually start to prefer corporate bonds over government bonds at this stage. And if we look at high yield, we see that this market is still captured in that range between, let's say, roughly 80 and 88.50, and I don't see this changing anytime soon. So high yield bonds are expected to move sideways. It's a rather wide range, I know, but there is not a real meaningful trend at the moment, and I don't see it emerging in one of coming months. If we look at real estate, the Vanguard real estate ETF, then we see something similar that's also caught in a range. We had a few attempts to widen that range a little bit. That didn't work. I think that the bottom, the lower boundary of that range is still capped at around 70, and the upside is around 85, and we're now smack in the middle of that. Again, a couple of dollars upside, couple of dollars downside. In percentage terms, it's quite decent moves, but from a long-term trend perspective, because that's what we're looking at here with these monthly charts, it's sideways. I mean, we're moving between those boundaries. There's no rhythm of higher highs, higher lows. This is a sideways market in real estate. Doesn't mean that you can't have any nice short-term trades, but the monthly trend is sideways. In commodity land, I think it's still weak. We had this breakout here. We're coming back. We have this 21.15, 21.20 as resistance. If that breaks, then I think I will slowly start to migrate to a slightly more positive view on DJP, on commodities. For the time being, I think this is a massive resistance level. If we move to GSG, that's clearly a negative. We had this break below very important support, and it looks as if we have a new high in place, which didn't even reach that former support level, now resistance. So I'm going to remain a very bearish view on commodities from a long-term perspective. Now, a chart that I really think is worth looking at is the S&P 500 in combination with the yield curve, and it's the 10-2 yield curve, 10-year minus 2-year yields. That's the bright blue line. That's the yield curve 10-2. I've got a gray 12-month moving average running on top of it, just to pick out the bigger trends, and we've got the S&P 500 in the background. And I'm going back and forth to things being bullish or bearish on this. It's hard. It's a very long-term thing, so it's very difficult to actually pinpoint from, okay, now this is it and this is the signal. But when I was annotating this chart for the show, my eye fell on the situation where, by the way, the red line is the zero level on the yield curve. So below zero is actually a negative yield curve. And we had that a few times in the past. I see that my line is not exactly at a zero, because here in 2019 we went negative very, very briefly. It was more clear here in 2006 and 2007, very clear in 2000 and 2001, only moderate, mildly 98, and very clearly late 80s, early 90s. But what I think I'm seeing, and you tell me whether I'm right or wrong, or whether you agree or not, is it looks as if the move from a negative or a near negative going back up, by the way, this is a flattening yield curve, and when it rises, it's a steepening yield curve. So here we go from negative to a steepening yield curve, and we have that 1990. This is obviously the start of the Gulf War, which is a big move down in stocks. And then we have this situation here, and that's 1998, and we have this big move down in 1998. And then we had this, there was only mildly higher. We go seriously negative in 2000, 2001, and when we start to steepen, that leads to a 2-3 year decline in the S&P 500. Now, then we have again a situation 2006, 2007, and we go into obviously what we all know, 2008, started 2009, serious decline at the start of a steepening yield curve. And now we are here. And when I wrote a few articles about the yield curve and the steepening of the yield curve already back in 2019, and for a while, I actually thought that this move down was like the decline that belonged to the start of a steepening yield curve. But now that we see that steepening is getting a little bit more aggressive, I'm sort of starting to think that we may actually be in a situation where we see something like this. So that we need to take into account, or at least be prepared, that the damage has not been done yet here in March, but that we have something ahead of us. I'm not 100% sure, but I'm definitely going to keep an open mind for the risk that this image is sending us right now. So I just wanted you to be aware of it. We're going for a quick break right now, and after that we're going to look at the monthly charts for various sectors. And welcome back. Let's start immediately with the monthly charts for the sectors. And the first one we're looking at here is materials. That's a nice chart. We broke above that horizontal resistance just above 60, 61. And again, this last little bar here is the price action of Monday the 2nd of November. So the monthly bar that we're actually analyzing is the one here for October. And as you can see, that remained firmly above that former resistance level. So the trend for materials on a monthly scale is still up, and we actually just broke to new highs. So that is a good thing for the materials sector. We go to communication services, sort of similar, not as strong as materials, I think, because the break here is already a couple of months ago, and for the last 2 months we're not able to push any higher. However, we are still well above that previous high, which should provide us enough support. So the monthly trend for communication services is still intact. We move to energy. That is a different ball. That's a different story altogether. This downtrend is in play, and we've just put in a new lower high below this former support level, and we're on our way lower. So on a monthly scale, this is still a very weak chart, and we can only wait and see whether the area, and it's going to be a wide area between, let's say, 20, which is the levels that we saw in 02 and 03, or 25, which is the level that we saw at the start of the year, can provide us with any meaningful support. For the time being, it remains a weak chart. If we look at financials, then obviously we had this very nice, although it was shallow, uptrend that was broken, and for the last, it's already 4 or 5 months that we're having trouble either getting back into that rising channel or breaking above that horizontal level. And again, in October that didn't work. There was an inside month, so not much happening in the financial sector, still struggling with overhead resistance. And I think that the downside risk here on the monthly chart is actually bigger than the upside potential. We go to industrials, then that's actually also a pretty good looking chart. We're having trouble with this overhead resistance area. It wasn't nice that the close was below this dotted line, although you could argue where you need to draw that, because I think this is a whole cluster of resistance, and it's pretty big area of resistance. So for the time being, I'm gonna stay with this up move here, well, we shouldn't look at that last bar, but if you look between your eyebrows, then you know it is positive that we're starting off the month right. Not a bad chart at all. Industrials, a little bit of trouble with that overhead resistance level, 77. As long as we can stay above 67, 77, I think industrials is still in good shape. Technology, we saw the weak rotation. We saw the weaker months, September and October. Especially October, we closed at the lower end of the range. But if you look at the long-term trend, this is still a strong chart. And again, do the line test. Just swap that bar chart for a line chart, and you will see that that trend is still, you know, higher highs, higher lows, no problem. The only problem is that the moves have been so big that you know, even some sort of a correction could be pretty serious in terms of percentage declines. Monthly chart is still going higher. If we look at staples, then we see that again it tried to break above that rising resistance line, and it failed and it dropped back into that rising channel. We'll have to see how that plays out. As I explained prior, very often dropping back into that former channel leads up to a decline to the lower boundary of that channel. That would mean a weak outlook for the staples sector. We need a little bit more confirmation for that, obviously, but I think that the staples sector could have a little bit more risk to it than we had in the previous months. And then if we go to, I'm going to skip real estate because we've seen that on the asset classes, same story. We look at utilities, and here that rhythm of higher highs and higher lows is intact. We're moving towards that resistance area. If we break above that rising resistance line, that would be another benefit for the utilities sector. For the time being, this monthly chart is still doing very nicely, and it's as we've seen on the RRGs, it's picking up a bit of relative strength as well. So here is the line version of that chart, pushing against that resistance area. I think utilities still doing nicely on the monthly time frame. Let's quickly move to healthcare. Here as well, a weak month. It's like an outside month. We went to a slightly higher high, or higher high than the previous monthly high, and we closed not below, but we had a low which was lower than the previous monthly low, and we closed in that lower end. Not the best of charts, but the trend, that rhythm of higher highs and higher lows, is still intact for the healthcare sector. And then finally, we're finishing off with the consumer discretionary sector, and you can see, despite the fact that it was a weak month and a week as we saw in the overview, it's still a very strong uptrend, and maybe we need a little bit more of a correction, but the trend on the monthly time frame is still intact. And that was it for the monthly charts that we are looking at. And I would like to finish the show with an adjustment in the long short baskets, on the short side actually, and we're going to do this really quickly. This is the RRG of the short positions that we currently have in our basket, and as you can see, NI source, utility stock, has started to move up and improve. And if you look at the chart, you can see that happening. You see that these RRG lines are starting to move higher, and the price chart is slowly improving as well. So I'd like to go and swap that for AMD. AMD in technology, rolling over rapidly. I actually wrote an article last week on the weakness that I see in AMD. And if you look at the price chart for AMD, I think that this stock is really at risk for completing a double top, and definitely the relative strength versus the S&P 500 is weakening. So we're going to make a switch. We're going to cover NI, and we're adding AMD as a new short position. And be on the lookout for a new write-up in the RRG blog on this edition and an overview of the long short baskets. And this was Sector Spotlight for today. Thank you for watching. If you liked the video, please let us know by clicking the thumbs up icon. If you have any questions or remarks, please use the comment section below, where you will also find my responses, so don't be shy. I won't bite. If you prefer to respond privately, my mailbox is open, and rest assured that I do read my mail and I will answer, although it may not be the next day. Sector Spotlight airs every Tuesday from 10:30 to 11 AM Eastern, with replays on the StockCharts YouTube channel. For now, please stay safe, and I hope to see you again next week for a new episode of Sector Spotlight.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.